What's going on, guys? Dwayne here with my investment journey, and I am back again. In this video, I want to talk to you guys about my stock market portfolio on Robinhood. So today was a very good and green day, and as of right now, my portfolio is up $11,000, and I'm going to show you guys exactly what a green day looks like, because the majority of the stocks or ETFs or whatever I'm invested in is up today. And as a result of that, my portfolio is up $11,000. Now, of course, Apple and Tesla drive my account. And if I have any other stocks or ETF, or not stocks, but any other ETF that has Apple and Tesla in it, of course, they also affect my account. So we're going to take a look at my portfolio right now, and the fact that, like I said, I'm actually up today $11,000. Okay, but listen, if you're new to this channel, my name is Dwayne, and on this channel, My Investment Journey, I talk about how to start investing in the stock market, and I show you my investment journey. So be sure to subscribe to the channel and click that notification bell so you don't miss a thing. All right, so this is a live stream, so if you're watching this video live, feel free to drop some comments into the live stream. It's a pleasure to see you guys in the building. I see right now we got my boy Slugger in the house. Slugger says, how do you feel? How do you deal with these soul crushing swings? That's the thing, right? Of course, the stock market is very much up and it's very much down. So it's interesting, right? Like today I'm up $11,000. I'm sure tomorrow I'm going to be down a substantial amount of money. And that's the beauty in being able to document and share with you guys my experience and my journey. Now, of course, my experience and my journey is based on the stocks in which I'm invested, or the ETFs that I'm invested in my particular portfolio. So this is not going to be your experience, but it's good for you guys to kind of see this and know what to expect. In the future, I'm probably going to be documenting this journey daily, just because I want you guys to see. And of course, there's always going to be new people researching the stock market on YouTube, and so they need to know kind of what to expect in regards to investing their money in the stock market. All right, so that's a good question, Slugger. I appreciate you asking that question. We got my boy Daniel in the house as well. Says, hope you're doing well. I'm doing great, man. It's what's today? Thursday, July the 7th. I'm doing good. I'm alive and kicking. I mean, it can't be any better than that, right? He says, best dividends in your mind. What do you mean? You're saying like what dividend stock I think is the best? That's always an interesting question, and certainly a question that you have to take with a grain of salt, because my opinion is my little 2 cents, and I don't know that it matters that much. By the way, we have 4 viewers watching right now. Be sure to smash the thumbs up in this video. It helps tremendously. All right. What I'm going to do right now is I'm going to show you guys on the screen my current portfolio, and it's going to be live, right? So this is what's going on right now in my account, and in regards to the market. Okay, sweet. So right now you're looking at the screen. You're looking at my current screen. So this is my Robinhood account. I'm logged into my account, and as you can currently see, I am up, right here. It says I'm up $11,443. When I took the thumbnail for the video, it was like $11,700 and something, I think. So if you can just kind of see the journey in regards to my account today. So the market for me here in Houston opens around 8:30. So I was already kind of up before 8:30. You can see that, right? So 8:30 we open here in Houston Central Time, and it was at $208,000. And since then, obviously it went up. By 8:45, it was up another $3,000. And then, of course, over here at the apex of today, it was at $216,000. So it was up $12,000 today. And currently right now, this is live. It's up $11,431 right now. Now, on the right side of the screen, you guys can see the companies in which I'm invested. So you can see here on the right side of the screen, this one here is Prospect Capital, and it's up 2% today. So the percentage is always kind of interesting. A lot of people don't know like how to deal with that. But right now it's trading at $7.38. And of course, like up 2% today is like 14 cents, right? So it's very simple to kind of calculate that, right? I'll open this up so you guys can see. Well, I didn't want to do that, but so it's up 14 cents. Okay, so what I did to kind of calculate, the 2% was I really did 7 $7.38 point times 0.02 on my calculator, and I got 0.14, so on and so forth. So I just said 14%, 14 cents. And then of course we came over here and checked, and you can see it's actually up 14 cents today. I'm going to go back to my portfolio here. So you can see if I scroll down, these are the things that I'm invested on the right hand side. So everything is pretty much green. You can see that. The only thing that's not green in my portfolio is Stag Industrial, and it actually went down today 0.32%. Okay, as you guys can see there. But everything is green. And the last thing I have is Dogecoin. So Dogecoin is up for me, well, not for me, for everybody, 2.73%. Then of course, MFA Financial right here is up 2.51%. Lucid Motors is up 7.74%, which happens to be a lot. As a matter of fact, I sold a little bit of this position today with Lucid Motors. I'll show you guys because I want to keep it a little transparent with y'all. I sold some shares today because I was like, you know what, I'm trading Lucid Motor. I have this because I decided to use margin investing. Okay, so as you can see, my position with Lucid Motors, my average cost is $25.18, and whenever the market swings up like this in one day, it's very likely that the next day it's probably going to come back down. If it doesn't come back down the next day, I feel confident that it's probably going to come down the third day, right? There are some cases where Tesla or Apple may go up 3 days in a row, right? But because it went up so much today, I'm not going to be surprised if it pulls back a little bit tomorrow. So right here, you're looking at the screen, my Lucid position. I did purchase this using margin investing, and I initially had 15,000 shares. Okay, so at one point today, I was up quite a bit, and I said, you know what, I'm going to sell. I'm going to sell a little bit. So I'll show you guys what I'm talking about real quickly. Okay, so I'm going to click show more because I want to show you guys that I invested a lot of money right here using margin investing. Okay, this is me using margin investing. Okay, so you can see here since March, I had I bought 1,000 shares and it was $25,000. But once again, this was using margin investing. Then I grabbed some more shares April 5th. Then I grabbed some more shares again on April 5th. Today, 4 hours ago, you can see that I sold some shares. It was currently for $19.71. You guys can see that there. And the reason why I decided to sell 110 shares was because I felt like that was the amount of the profit that I had made at the time that I sold it, right? So my position with Lucid Motors today was up over $2,000, and I said, you know what, let me just sell a little bit today. So I sold 110 shares because that was around the amount as far as profit is concerned that I made today at that point. And the reason why I decided to do that, so I sold some and it's like $2,000 and change. I decided to do that because I feel like, okay, the market's going to pull back a little bit, right? This Lucid Motors today went up over $1.50, okay, which is a lot. Now, of course, Lucid has gone up $2, $3 in one day because, it kind of, it does that because it's kind of like Tesla, right? So currently Lucid Motors right now is trading for $19.63. Now I sold it for $19.71. Okay, I think it's going to pull back a little bit. So what I'm going to do is, if it pulls back and it's like $18 or $17 or $18.25, I'm going to use that same $2,100 and something and grab as many shares as I can get. And it's going to be more than 110 shares because I sold 110 shares at $19.71, right? So I'm trying to accomplish a couple of things. I'm trying to bring my average cost down from $25.18, which right here you can see it on the screen. $25.18 is my average cost. Okay, so even though $2,000 is not a lot, by me deciding to sell a little bit, take a little profit, not really because I'm down overall, but take a little profit based on today. And then in the future, in a couple of days, if it's down $18.20, $18.50, I'm going to take that same $2,160 something and grab as many shares as I can grab. And it's going to lower my average cost from $25, from $25.18 to maybe $25 flat, or maybe $24.90 something cents. So that was kind of my thinking on that. I just wanted to, show you guys that and kind of keep it a little transparent with you guys, because I did do that today. Okay. We're going to jump back and look at my entire portfolio once again. And so, as you can see, everything in my portfolio is green except for Stag Industrial, right? But let me talk about the two main stocks that really kind of drive my account. Okay, I'm going to show you guys. I'm going to open up Apple and Tesla just to kind of give you guys an idea, right? Out of the $11,300 and something now, right? It's gone down since I started the video. But out of the $11,000 that my portfolio is up today, right? I'm going to show you how much of that is regarding Apple and Tesla. So right now, Apple is trading for for $146, right? Apple went up today $3.43. Now I have a huge position with Apple, as you can see. My overall return with Apple right now is I'm down -2%, which is $4,500. My average cost per share with Apple, $149.57. And I did acquire a lot of this account using margin investing, right? I spent $110,000 recently with Apple. And at that time, Apple was trading for $171 and something. I'll show you guys that particular buy because I want y'all to see what I'm talking about. All right, let me scroll down here. Okay, so right here, you see there was a buy February the 11th, and I actually used margin investing for this. So I spent $110,000 of my margin investing, and at the time, Apple was trading for $171.96. Okay, so of course that hurt my feelings. My average cost was $125 before that, and so it brought my average cost up to what it is now, which is $149, right? So you guys can see that my average cost with Apple, $149.57. Apple's trading for $146. Now I currently have 1,268 shares with Apple, right? And so today's return is I'm up today $3,907 today because Apple went up $3.43, and I have 1,268 shares with Apple. So I'm gonna show you guys. I have 1,268 shares with Apple right there, as you guys can see, and Apple went up $3.43. So we'll multiply that times $3.43, and actually it's saying that my return should be $4,349. Okay, once again, if I take my shares 1,268 times, right, multiply that times 3.43, that should be that I'm up $4,300 and something. I'm not sure why there's a discrepancy with what's on the screen versus what I just told you guys, but basically that's the simple math of it, right? If I had 100 shares with Apple and Apple went up $3, 3 times 100 is $300, right? So that's Apple. Okay, let me show you with Tesla what's going on with that. So today my return with Tesla is I'm up 5%. Because you can see here $2,523, right? So that's today's return regarding Tesla. Now I think that's based on kind of where where it was trading in the beginning of the day versus right now. So I currently have 70 shares with Tesla, as you guys can see here on the screen, 70 shares. And of course, once again, you can kind of calculate what profits you are, like the difference, by doing 70 shares times it's up today $38. So we'll do 70 shares times 38, which gives me $2,660. Okay, that's just a simple math of it. Okay, but I want to share that with you guys because you have $2,500 with Tesla, my portfolio is up, and then $3,800 with Apple. So let's just do that real quick. 2,500 plus 3,800. That's responsible for $6,300 of the $11,000 that my portfolio is up right now. And that's huge. I mean, once again, you guys saw on the screen, every single one of the companies in which I'm invested went up tremendously today. I mean, and this is huge. I'm going to show you guys again the screen because the majority of them went up like 2% or more. Okay, so I'll show you again on the screen. So currently you can see I'm up today $11,303 right now. On the right hand side of the screen, you can see my positions. So Prospect Capital, I'm up 2.07%. AG&C Investment, I'm up 1.23%. Armor Residential REIT, I'm up 1.98%. Starwood Property Trust, I'm up 1.85%. Gladstone, what is it? Gladstone Capital? What is it? I don't remember. Not Gladstone Capital. I don't remember what it is. I'm going to open it up because I want to make sure. Gladstone, maybe it's just Gladstone. Okay, Gladstone Capital. Wow, I was right. Gladstone Capital, I'm up 2.76%. Kinder Morgan, I'm up 3%. Exxon, I'm up 3% again. Huntington Bank, another 2% up. Stag Industrial is the only one that's red in my portfolio today. I'm down 0.32%. VYM, which is Vanguard high yield dividend ETF, I'm up 1%. Apple, I'm up 2%. Tesla, I'm up 5%. VGT, which is Vanguard Information Technology ETF, I'm up 2%. VUG, which is Vanguard Growth ETF, I'm up 2%. Agenus, this one here, this was one of the stocks that I got for free. That's why you see that I have a position of 2001 shares. I decided to take some of my margin investing and I grabbed 2,000 shares. And I'm not doing too bad with this right now because as you can see, it's up 6% today. 6% is actually huge. And then Lucid Motors, I'm up 7%. MFA Financial, I'm up 2%. And then Dogecoin, I'm up 2%. So that's pretty freaking cool. Like I really can't complain about that. All right, I'm gonna jump into the live chat here, but once again, I wanted to make this video to kind of show you guys, you know, the swings that the stock market takes, and of course these are solely going to be based on the stocks in which you're invested, right? If I didn't have Apple and Tesla and I just had a bunch of dividend stocks, you know, maybe the swing wouldn't be as aggressive, you know, whether it's aggressive going up or aggressive going down. The swings wouldn't be that big because those stocks aren't gonna, you know, go up $1, $2, $3, $5, $10 in one day. That's not going to happen with those types of stocks. But with technology stocks such as Apple and Tesla, that you know, Tesla for sure, you know, Tesla can go up or down $30, $50, $70 in one day. Like that's crazy, but that's how Tesla is. Now Apple, $2, $3, maybe $4. You know, I've seen like a $4 swing. Yes, I've seen that occur with Apple, and it's pretty interesting how much articles affect you know, the stock market or one particular company. If there's a good article that was written or released, or a bad article that's written or released, it definitely affects what happens in the stock market that day. And so in a way, it kind of can become predictable. Not to the point where I feel overconfident and feel like I could swing trade consistently or day trade consistently and make money. I don't have time. I don't have time for that. You know what I'm saying? I'm just a chill type of dude. All right, I'm going to jump into the comment section in the live stream here. We have 15 people watching. Listen, this is a live video. If you have any questions, slap them into the comment section. I'm clearly not a guru, but I will do my best to answer you guys' questions in regards to the stock market and investing. I'll give my two cents if I have any to give. All right. But this is a live stream. So if you have any questions, slap them into the comment section. If you're watching this video back and this is a replay, feel free to subscribe to this channel. I'd love to have you as a subscriber, and smash the thumbs up in this video. All right. We have 14 viewers, 4 thumbs up. Smash the thumbs up in this video, please. Free and easy way to support this video. Gold Leaf Vending says, is ORC good to invest into? Me personally, I had a huge position with ORC. I had spent $12,000 with that particular company, and I sold my entire position. And since I sold my position, it has gone down substantially. I'm going to even pull that up on my screen for you, so I can kind of show you what I experienced, and I'll show you when I decided to sell, and I'm also going to show you what ORC is currently trading for right now. So that's Orchid Capital, I think is Orchid Capital, Orchid Island Capital. Okay, I'm searching for it right now on my screen, and I'm going to show you guys. All right, so hang on, give me 1 second. Let me get this comment off the screen real quickly. Yeah, give me a second there. All right, so good question, Go Leaf Vending. Here we go. So I have it pulled up here. Let me share my screen. Okay, so right now, Orchid Island Capital is trading for $2.95. And I'm laughing because like I was super aggressive with this one, and I'll show you guys. So I'll scroll down so you can see my history here when I ordered, when I initially got a huge position. Okay, so right here, you see April 19th on the screen. I had $11,000 right there for this particular purchase, and it was for I purchased over 2,000 shares, as you can see, and it was at the time $5.21. Okay, April 15th, I spent $1,000, and it was trading for $5.72. Right, so right here, you can see I had over $12,000 invested, right? Then, of course, I got my dividend payments coming in, but I want to show you guys when I sold, right? So let's see here. These are buys. Right here, August the 19th, I sold. So back here, March 21st, I had $12,000, and it was $5.98 at the time, right? $12,000, $5.98 right here. March 29th, 2021. Okay. Then I bought some more, $5.72, right? Then I bought some more, $5.21. I'm sorry, I didn't buy more here. I sold right here when it was $5.21. So I sold right here, April 19th, $5.21 was the cost at the time, right? I had 2,181 shares, right? So I'm going to do 2,181 shares. Right now, Orchid Island Capital is trading for, let's go back and see what it's trading for, $2.95. So right now, I would have $6,433, right? I would be down like basically half of the money, right? So for me, is it a good investment? I mean, now is obviously a better time to buy Orchid Island Capital than when I bought it, right? Because, man, that would have sucked for you to hold it that entire time. Now, I have no idea what's going to happen moving forward, but that was for whatever reason, I don't remember at the time why I decided to sell my position, but I did a little research, and I was just like, and I was like, I got to get out of here. And I mean, looking back on it now, I'm like, yeah, that was a good choice because, of course, you know, it went down, you know, almost half of what it was when I had it. So, of course, I feel like that was a good choice. And I got lucky regarding that because it doesn't always work that way. Earlier today, when I sold like $2,000 worth of shares with Lucid Motor Group or Lucid Group, I decided to do that. I sold it and it was like $19.71. And then after I sold it, it went up higher. It was like $19.86. In the stock market, like whenever you decide to sell something, you can't labor over what happens after you sold it per se, right? Like I've sold things and the price of the stock has gone up. That happens a lot to me. And today, normal, right? I sold it and it went up, and now it's down below the $19.71 that I sold it for, but initially it went up, right? So you can look at that and feel like you're missing out, but that's just the stock market. Like it's all over the place, and that's why it's important for you to invest in solid companies that you feel very confident about. I wouldn't necessarily invest in things that you don't know. in companies that you don't know, right? Of course, everybody wants to kind of hit the lottery and find the next Amazon or the next Apple or the next Google or the next whatever, right? But in order to find that, you have to be in the in crowd, and you also have to have some luck, right? Because like you can think you found it, but then you still got to be real aggressive and decide to invest a substantial amount of money on it, and then cross your fingers and hope that it's the next Apple, right? Like, I mean, that's all it is in a way, right? Because you can research from now till, you know, you're blue in the face. Like, I'm very confident in Apple, and Apple's in a great position, and Apple, you know, is a cash rich company. You know what I'm saying? Apple's not in debt, right? And those are all great things. I don't think Apple's going to go bankrupt in my lifetime, right? I'm already 44, but that doesn't mean that, you know, anything is not possible, right? So the stock market is just like that. It's always quite interesting. We got my boy Cinna Madness in the building. What's going on, bro? Thanks for stopping by. He says Dwayne is back again. Yes, sir. I'm in the building. Thank you guys for stopping by and jumping into this live stream. This is a live stream, and this is really, really cool because I definitely want to have more live streams in the future. And I will, right? I will. I definitely need to do that. So I appreciate you guys jumping back in here. Daniel says, how diversified is your portfolio? Was it designed? You know what? I am not insanely caught up with having a diversified portfolio. Now, of course, there's nothing wrong with that. One of the conversations that I had with one of my riders in Uber, because I drive Uber, and I picked him up in this very nice neighborhood, and it was a huge house, okay? And so it's interesting, you know, I was like, hey, you know, you seem like a smart guy. You know, what were some of the decisions that you made regarding investments that helped you to accomplish some of your most successful things financially? And he said, you know, actually, I'm in finance, and I deal with people, and I help, you know, and I see a lot of things that people have done, rich people have done in order to kind of get their money initially. And what he said to me, he goes, you're not going to believe this, but a lot of people that have money kind of put all of their eggs in one basket. And I'm like, what? And he's like, yeah, I know, because you hear people talk about diversify, right? But he said, like, a lot of people actually put a lot of their, you know, big chunks of their money into one thing. And I'm not telling you guys to do that, right? But it was definitely interesting, right? Here's a prime example. I have invested, since I started in the stock market, $254,000 in the stock market, right? Now, had I invested that all directly into Tesla, I would be sitting very pretty right now. My portfolio would be all the way up. It probably would be over $1 million, right? But I didn't do that. Okay. If I had done that with Apple, if I had invested the $250,000 something with Apple, my portfolio would probably be like $600,000, $500,000. Okay. And that's the thing about, you know, the stock market and life. Like, hindsight's 2020. You always look back and say, man, if I had known X, Y, Z. So when it comes to like diversifying your portfolio, I think that's always the safest thing to do, just because it's safe, right? And there's nothing wrong with that. You know, slow and steady does win the race. But also, just like in life, you can improve by leaps and bounds. Every single thing is not about baby steps, right? There are some things in life that you don't necessarily have to take baby steps. Sometimes you can just leap, right? And it's crazy. Now, I'm not saying that taking a leap or having the expectation of a leap for everything is what people should do. Absolutely not. Like, that's silly. If you're 30 years old, obviously, you know, life doesn't really work that way. Now, of course, there are the special cases. There are the 1%, 2%, whoever, but that's not me and you, right? So, yeah, I mean, as far as diversified, my portfolio is not very diversified, right? Because right now, Apple is 49% of my portfolio. And then the next biggest chunk is Tesla, right? And that's huge. Now, somebody that really believes in having a diversified portfolio, they're looking at my account and like, it's suicide to them, right? But the concepts are different, right? Like, I know and I feel that I can grow my portfolio sooner and faster by investing this way, whereas it's going to grow slower and probably more at a steady rate over the years. investing in a bunch of blue chip companies, solid companies that are not super exciting. There's nothing going on. There's no 7%, gain or losses in one day, right? So there's validity in investing that way. One of the beautiful things about life is that there's more than one way to skin the cat, the financial cat, right? The proverbial financial cat, if you will, right? So, I mean, there's no right or wrong. I'm not here to tell you guys how to invest and what to invest in. That's never what this channel is going to be about. That's never going to be my approach. I don't have the time for that. I guess I'm just not that confident. You got a lot of other YouTubers out there that's doing that. I won't ever do that, I don't think. All right. Cinemana says, Dwayne, I'm only up $54 on a 3,200 portfolio. Keep in mind, I had to start somewhere. With me right now, I invest 15% of my income, and I started in 2022. Bro, you're already ahead of the average Joe. Like, I mean, the fact that you're thinking on this wavelength is a huge deal, and we know that that's going to pay dividends, if you will, over time. So that's cool, man. I definitely was not doing that at your age. I didn't even have the information or the knowledge, and at your age, it wasn't readily available, right? When I was 20 something, let's say 24, I know you're younger than 24, but let's say 24, there was no Robinhood for me to jump on. If you wanted to invest, you had to probably have at least $10,000, I would think, to get a brokerage account. So there was no Robinhood and Weeble and, M1 Finance and all that. None of that was around. Okay. So, yeah, take advantage of it, man. Cinemana says, kind of funny to think I got $74.20 in free Apple stock from 3 different brokerage bonuses. Nah, man, that's dope. Charles Schwab gave you $20.20. Weeble gave you $50 and Public gave you $4. That is awesome. Free dividends. There you go. There you go. He says Dogecoin versus Shiba Inu. Between the two, if any of them is solid, it's going to be Doge, right? Just because Shiba Inu has a long way to go. And I do have a little position with Shiba Inu. I actually have a Weeble account that I never really talk about. And my Weeble account is all over the place. I don't like it. That's why I don't talk about it, right? But I do have a Weeble account. And I'll show you guys currently my position, and I'll show you my overall, right? So I have in my account, I think I've invested $28,000 in this account. So right now, this is my Weeble account. It's valued at $21,000, right? If I do profit and loss, and we'll do profit and loss all time, right? All time profit and loss right there, I'm down $9,000. Okay, so I guess I have a little more than $28,000 in this account, right? So that's what's going on with my Weeble, and I'll show you guys my position, right? So I have a little bit of Cardano. I bought Cardano when it was trading for $1.49, right? And it's trading for 47 cents right now. So now's a good time to grab some more shares. I have Lucid Motor here. I bought 300 shares, and it was for $49.50. You guys can barely see that. It's underneath the 1963, right? Then I have a position with Tesla. I have 20 shares with Tesla, and my average cost for that is $997. Tesla right now is trading for $731. And then I have some Shiba Inu. You can see there. I bought when it was 4 zeros and 76, and right now it's 4 zeros and 11. So as you can see, I'm down in this portfolio, right? Like I'm down 2,000 something with Shiba Inu. I'm down 5,000 something with Tesla, as you can see there, poorly, forgive me. I'm down 8,000, almost $9,000 with Lucid Motors, and then I'm down $1,100 with Cardano. So that is my position with Weeble. Now today, just to show you guys that it's green everywhere, today I'm actually up 1,100 and something right here, right on the green. You can see I'm up 5.81% in this portfolio, which is $1,182 as of right now. I don't talk about that account a lot just because I forget. I don't forget, like I don't think it's there, but I forget to talk about it. So I guess with the $254,000 on Robinhood plus almost $30,000 on Weeble, that's a lot of money. So that's kind of another reason why y'all don't see me grabbing a whole bunch of shares, right? Or, averaging my costs down lower, right? Because I'm like, I got a lot of money in the market. Like, I need to just kind of chill a little bit, right? Now, of course, there were times when this same portfolio that you guys see on Robinhood was $280 something thousand, even $312,000, right? This exact portfolio has been that high. And I can show you guys that on the screen real quickly here. Let me share my screen with you guys. All right, so if I go back out and show you guys, no, I can't show you anything there. If I show you guys 1 year, right, in the last year, my portfolio is down, 13%. But right here, you can see my portfolio was valued at $311,000. I was up overall $62,000. This is March 29th, 2022. So it wasn't even that long ago. That's March, right? It's currently July. So, that's kind of what's going on. I mean, that's what's happening in my portfolio. And then, of course, all time, I'm down negative $42,000 right now, right? All time, because, of course, they're calculating back here. I had invested some money back in 2016 and 2017, and then I lost, negative $4,399. I decided to sell my position because I was tired of, I didn't know what the hell I was doing, right? I didn't have any stocks with Apple at this time. I didn't know anything about anything. Now, I mean, that's the thing, right? I go back to talking about how, that's life in a way, right? You're smarter, and moving forward, you're gonna move accordingly. Now, if in 2016, 2017, I had the information that I have now, I would have bought Apple, right? Like, I would have bought Amazon. I mean, but I didn't even do that. I was trying to day trade, but not even day trade, but I was trying to make a quick buck, and then it was hard for me to watch my money go up and down. So I just sold everything. And then, of course, now today, I got a gang of money in there. And, of course, I'm watching my portfolios down today, $7,000. My portfolio's down, today, $2,000. My portfolio's up $18,000. Like, it's definitely an interesting journey. But what happens is over time, you learn to just kind of deal with it and don't let that affect you as much. I'm going to be honest. It took me a long time to get to that place. You know what I'm saying? Slugger is in the building, says VGT looks solid. Bro, I like VGT a lot. Like, if I had a lot of money right now, when Apple went down to like $131, I would have grabbed more shares of Apple and bring my average cost from $149 down. I would have spent more money with my position with VGT, because my average cost per share with VGT right now is like, I don't know, like $300 and something. It's up there. I'm gonna find that real quick and show you guys. My average cost with VGT is like either $3 something or $400 and something, right? All right, so I'm going to share my screen real quick. All right, so here's VGT, and right now VGT is trading for, wait for it, $342. Okay, my average cost per share with VGT is $409 per share. Now, of course, VGT was, up over 420. If we look back here, we'll click on the 3-month mark, right? You see VGT was over here trading 382. Okay, that's not a good example. Let's click on the year mark. VGT was over here trading for $466. Like, I was up. Your boy was up, right? This is December, right? So, even here in March, $428, right? But one of the things that intrigued me with VGT and VUG is that over the last 5 years, they're up substantially. In the last 5 years, they're up 141%. This particular ETF, I mean, that's huge. The only other companies that are a lot different than this is like Apple, right? In the last 5 years, Apple and Tesla is up, substantially. And so for me, that was a little enticing. Like, I'll show you guys Apple in the last 5 years. In the last 5 years, Apple is up 302%. That's a lot. And then same thing with Tesla, right? Tesla is up the last 5 years. Tesla is up, like 1,000, 2,000%, like something stupid, right? I'll show you guys. The last 5 years, Tesla is up 890%. Okay, which is a lot. I mean, that's a lot. So once again, it's just one of those things where, if you were lucky enough to kind of be in the right place at the right time, and then bold enough to make the decision to jump in and invest the money, right? All of that plays into, right? Like when you say, okay, I'm going to invest, you got to get your money to the brokerage account, right? You got to get the brokerage account first, and then you have to pull the trigger. You got to buy shares or sell shares, right? So it just kind of really depends. I feel like it takes a while to kind of develop a plan, right? I think the safest thing to do for somebody starting new is to invest in an ETF, right? That would be my first advice, just because the ETF is just diverse. It's just diversity is built into the ETF, right? Because it's more than one company. So that's already a win. That's already, a green light. Okay. And then, if you want to then maybe consider getting single stocks, start with the companies, start with Apple, Facebook, Amazon, Netflix, you know what I'm saying? Start there, because those are the bigger companies. One of the things I like about ETFs, especially when they tell you the top 10 holdings in the ETF, I feel like when they tell you that, they're damn near giving the answer away, right? It's like, you have a sneak peek as to what let's say it's a Vanguard ETF. So Vanguard is telling you, we believe in these companies so much, right? Let me show you what I'm talking about. So we're back again on VGT, and I'm going to scroll down here, and I'm going to show you, so the top 10 holdings, right? So they tell you the breakdown of this particular ETF. 90% of this ETF is technology based, right? So the top 10 companies, right, is Apple. So when you invest $100, $22.59 of your investment is going to go towards Apple, right? Then the next one is Microsoft. Then you have Nvidia. Then you have Visa. Then you have MasterCard, Broadcom, Adobe, Accenture, Cisco, and Intel. Most of these companies, So once again, if you're invested in an ETF such as this, these ETFs are, when they tell you the top 10 holdings, in a way, they're kind of showing you, like these companies might be solid. Let me show you another ETF, because this one is going to have different companies. Okay, this one is VUG. This is another Vanguard ETF. And Vanguard is one of the, most respected companies out there. A lot of people have, their investments with Vanguard, or at least in their ETFs or index funds. Okay, so I'll scroll down here, and this is Vanguard Growth ETF. Now, this is a little more diverse, right? You see that 41% is technology, right? And then, consumer, right here, you can see that is another 18%, communications, 13%, so on and so forth. Here are the top 10 companies. Once again, companies that you should be familiar with. The first one, Apple. So here's another index fund or ETF telling you Apple's their number one. It has the biggest chunk out of all of the pie, right? Your $100, $12 would go towards Apple. Microsoft is next, Amazon, Alphabet Class, which is Google, Tesla, Alphabet Class C, another Google, Meta Platforms, Facebook, Nvidia, Visa, and Home Depot. Once again, in a way, they're providing the answers to you. Right now, this particular ETF, VUG, is trading for $234. My average cost per share is $283. This would be a great time to grab some more shares, but your boy can't do it because your boy got way too much money invested in the stock market. So I need to just sit still. And of course, I have other things that I want to accomplish. All right. Jeff says, your thoughts on Roku? Honestly, I don't know that I have any real thoughts on it per se. I don't know enough to feel like, oh yeah, Roku's going to keep on climbing up. Right now it's trading for $93. Okay, so let's just take a look at that. It's trading for $93 right now. Okay, and in the last year, let's just kind of see what's occurred in the last year. In the last year, it's gone down 78%. That's huge. Obviously, everything has gone down in the last year, but that's huge. It's down 78%. That's a lot. Then you have the 5-year outlook. Okay, so the 5-year outlook is not as bad. But no, would I personally spend money on Roku? I wouldn't, but that's just me. And I don't know enough to feel confident enough to spend money with them. So, 3 Degrees West says, is Nvidia a good long-term investment? I don't know. I feel like it's obviously the leading company when it comes to, video card or graphics or whatever it is exactly. It's obviously, if it's not the leading company, it's obviously in the top, right? So from that perspective, I think it may be a win. But if you want to invest with Nvidia, you could just get, an ETF with VUG, because Nvidia is a part. It's one of the companies, right? And the thing about these ETFs are, you got over 200 companies in one of the ETFs, over 300 companies in another ETF. I mean, like, that is the definition of diversity, diversification. And you don't have to be smart, and you don't have to figure it out yourself. That's the beauty in index funds or ETFs, is that the diversification is built in, and someone else has done the work for you. All you do is keep shoveling your money into it. Of course, if you're fortunate enough to buy some shares and the cost goes down, and you can shovel some more money into it when the cost goes down and bring your average cost down, that's great, because over time, the stock market continues to go up, right? The overall trajectory is going to be up, right? It's not going to be up the entire time, right? We want that. But the stock market is very much like life. Message, it's very much like life, right? Life isn't just down, or up. So, life is up and down. It's ups and downs, period, right? And the cool thing about it is, like, the more you have experience with life and the more you pay attention to the moments of your life, you start to recognize the downs as the downs are occurring or before they occur. Same thing with the ups. Listen, this is going to be a moment, and I need to totally embrace this moment and enjoy this moment. And the moment's coming up before the moment is there. And that's the beauty of having the experience of life. The same thing in the stock market, right? Like, you do your research and it's based on history. You just hope that history continues to repeat itself. And it's crazy because history does repeat itself in a lot of things. And it's interesting because it repeats itself even in bad ways, right? I mean, take a look at, what's happened in the last 2 years. I mean, in the last 2 years, we've had some ugly things happen. And it feels like, wait, did we revert to the 90s? Because, like, this stuff was going on in the 90s, right? But now it's 2022. So, like, in a way, we were improving, and moving forward, and then we took steps backwards. So very much interesting. Slugger says your risk tolerance is through the roof, buying on margin and letting it ride. No gamble, no future. It definitely is through the roof. But the thing is, a lot of people don't understand a whole lot about margin, and me myself too. And that's kind of why I decided to do it. And I decided to be as aggressive as I was on Apple, because it's Apple and my portfolio is in a good place. And so they extended to me a lot of margin. It was over $3,000. And initially I wanted to just invest like 30% of that, because that was a safe number that I had researched and found out. So I was like, okay, well, because I'm just aggressive and ridiculous, right? I'm like, to the moon, right? Everything was already up and in a bubble, but you're always learning when it comes to the stock market, right? And I was like, I'm just going to do it. 110 G's at one time. Boom. Right. And obviously, if you're lucky, you can be lucky. Like, for example, if I had bought shares over time with Tesla from when I bought shares in 2020, I think August 2020, I bought shares. If I had just done that over time, my average cost with Tesla would be more. Right now, my average cost is $493. So my average cost would be a lot higher if I was continuing to just invest with Tesla over time. My average cost would have gone up and up and up and up and up. So sometimes it works out in your favor and sometimes it does not. If I had used margin investing when Tesla was trading for, when Apple was trading for $130, right, I would have got a bigger bang for my buck versus I bought it when Apple was trading for $171, right? You never really know. Like, you're going to make the best decision that you can make based on the information that you have today and what you think today. And when it comes to the stock market, it's hard to be patient and sit still. And like, when you have money in your brokerage account, it's hard to sit still and not invest it. It's hard. It's different. But yeah, my risk tolerance is definitely, it has grown because when I first started back in May 2020, like my mood was up and down with the market. Yeah, I had a good day today. I'm happy. Oh, today, I lost X amount of dollars, right? So it takes time to get to that place. And the beauty is, like, a lot of people can just get there eventually. When you're investing $1,000, that's a little easier to tolerate a 3% loss. A 3% loss for $1,000 is what, $30, right? Like that's not that big. A 3% gain for $1,000 is $30. That's also not that big. But if it was $100,000, 3% is a lot bigger for $100,000, right? That same 3% becomes, a lot, right? It becomes $3,000. A 3,000 swing upwards is good. A 3,000 swing downwards is not as good. So it just really kind of depends, right? So, hopefully as you continue to invest, you kind of learn how to manage that. Miss Poulard, what's going on, girl? Thank you so much for stopping by. It's a pleasure to have you in the building. She says, good evening. Good evening to you, ma'am. I appreciate you stopping by. I appreciate that support. Slugger says, how did you originally accumulate $250,000? Nah, come on now, Slugger. We can't give all the answers. I won the lottery, right? What happened is, to be honest with you, most of the times life works out beautifully, right? We do things in our lives that we're building towards tomorrow, but we don't even know, right? You get experiences with here, there, and it seems very random, right? Like I used to do YouTube videos. I've done videos on YouTube from 2009, but of course I didn't do it the way I'm doing it now, right? So I've been very fortunate in my life to get to a place where, as a result of helping other people, I have been fortunate to help myself in that process as well. So that money that I was able to accumulate has a lot to do with just that, like I just said. But no, we can't talk about how I did it. Come on now. What you mean? Like, hard work, right? Hard work. Titan says Dwayne should debut in the WWE as a heel. Yeah, I don't get that one. You got me, my bro. Clonin around says bye. Okay. All right. Cinemadness says, Dwayne, it's so funny to see how whenever the Fed announces the hikes, they're doing affects the rates on all the major high yield savings account, Marcus, Amex, Comedy, Discover, and Capital One. Well, of course. And it says they have basically tripled from like 0.4% to 1.1% APY. No, it's definitely interesting. It's a learning experience, right? Because these are things that we don't necessarily, we don't pay attention to, and we haven't paid attention to in the past because maybe we didn't even know. Like I know I didn't know, right? But it is interesting, and of course I do see that. Hey buddy, how's your portfolio doing this week? What's your opinion on ACC type of ETF? I don't know what ACC type of ETF is, to be honest with you, right? I don't even know what that is. But my portfolio is doing okay. I mean, it's up and down, right? Today it's up, right? So of course it's easy to decide to do a video, because it's up. But I'm definitely gonna, keep it real and keep it transparent and try to do videos when it's down, because y'all need to see that, because that's it's real. You know what I'm saying? Like, it's easy to show, the good things, of course, because, it's good. Nick says, what do you think about Qualcomm? Nick, I don't know a whole lot about that company. I mean, I know the name of it. That's about it. I see here on my screen that in the last year, it's down 5%. In the last 5 years, it's up 141%. Let's see if they pay any dividends. It's always interesting scrolling on the desktop, because I don't know where to find stuff on the desktop. But the information's definitely easier to find. Okay, so they do pay a little dividends here. So yeah, this would be an interesting company to invest in regards to that, right? And the company's been around since 1985. So they definitely have some history there that you can research, right? This is probably going to be a long-term play, obviously, right? So from that perspective, I think whenever you can get a dividend payment out of a company, I think that's a win. You know what I'm saying? Especially a company solid as Qualcomm, like it's been around for a while. Like we're not talking, you know, a REIT that has a super high dividend yield. We're talking a solid company that's been boring and been around for quite some time. Cinnamon says, one of the really cool savings account I saw was Yada Bank. I got a sign up bonus for 125 tickets because it gamified savings. Its gamified savings were daily. They choose awards the same way the lottery does. Very interesting. Very interesting. Okay, thank you for clearing up regarding the ACC ETF or distribution ETF. Honestly, my thing is, and this just makes the most sense for me. Like it kills me when there's so many people that are here on YouTube that are super opinionated and super concrete, right? When it comes to investing, number one, you work hard for your money, okay? And it's your money. You have to do what you feel the most confident about, okay? I know it's very crazy because I would say that I was a conservative guy. I'm a slow and steady kind of guy. But because I love money the way that I do, I risk big in order to win big. And when you risk big, you can also lose big. So it just really depends on what your comfort level is. It doesn't matter how we skin the financial cat. It doesn't matter how we get to the destination. Your experience and your strategy is yours. And watching others and seeing what others are doing, like that's great, but it doesn't matter. It's like you're watching the game. Watching the game is a lot different than being in the game, right? So, you know, as far as that's concerned, I mean, I would just do whatever you're the most confident about. You know, like I talked a little bit earlier about diversification, right? Someone asked a question about diversification and is my portfolio diversified? And I'm like, 49% of my portfolio is Apple. You know what I'm saying? And it's not like I have my chunk with Apple, but then I also have ETFs and Apple's in those ETFs. So of course that contributes to my Apple piece of the pie, right? That's obviously not smart. It's not smart to a lot of people. But like I also said a little bit earlier, you know, if I had just invested $250,000 into Tesla back in August 2020, my Tesla portfolio would probably be over $1 million right now, right? Which is like crazy to think about. But number one, you got to be hella stupid or ballsy to make that type of decision. So you got to do what's most comfortable to you, and after you've done your own research. Slugger says thoughts on Uber stock. That's actually kind of funny, right? Like I should totally have Uber because I drive Uber. But I mean, Uber stock has to be solid. I mean, Uber's like they're the leaders. Now the thing is, you know, has it peaked? Right? That type of thing, because of course there are going to be other rideshare services that come along in the future. They're already here, right? So yeah, I mean, I think Uber's probably a decent one to invest. I don't even know what they're trading for right now. Kind of curious, so I'm going to look it up here on my screen. Let's see, and I'm going to share my screen with you guys. So right now Uber's trading for $133. No, it's not. It's trading for $22. Sorry. $22, and let's take a look at the history. In the last year, Uber has gone down $28. In the last 5 years, of course, it's probably going to be well, I was going to say it's positive, but it's not positive. So Uber started at $42. I think Uber's a buy, to be honest with you. I mean, if it started at $42 and right now it's for $22, I don't think that's a bad place to kind of invest in Uber. And I feel like Uber's going to be around for a while. So interesting. I feel a little more confident saying that regarding Uber. But in general, I try not to give people advice. That's not my business. Ever think about making vids on gig work? Of course, I've thought about it. The thing about making videos is videos are super interesting. If you think to yourself, oh, this video is going to be a good one, this is going to be a hit, I'm going to get so many views, I'm going to get YouTube rich, and then that video doesn't do that. So it's always kind of interesting because I never know what video is going to do extremely well. My thing is I'm going to make quality videos and the rest is going to happen because everything else is out of my control. But I have thought about it. As a matter of fact, I thought today, I thought that I could do, not necessarily even on this channel because I have another channel, but I thought that I could do like, you know, maybe daily videos just showing my consistency, right? Because in the last month and a half, I've really worked hard on myself physically in the gym to get to a more healthy body weight. Now, I'm not in there pumping iron and nothing like that, but just it would have been cool to document that I was being consistent because I really was consistent. And as a result of being consistent, you know, my consistency has paid off, and I'm better. I'm a lower weight right now, and I'm more healthy. And yeah, so yeah, I've thought about, you know, sharing more videos and like daily type videos as far as that's concerned. Maybe, you know, showing Uber and whatnot, but the videos are not as easy as people make them look, and editing is not as easy as people make them look. I've been doing YouTube for 4 years, so I probably have done, you know, 800 videos, and editing 800 videos is not fun, and it kind of wears on you after a while. The live streams are a lot easier to deal with. Cinemadness says my uncle actually works for Qualcomm, and I've been to the Qualcomm Stadium in San Diego. It's huge. We're talking about 70,000 people max capacity. Oh, that's cool, man. Dazzy says my $10,000 portfolio has gone from negative 16.5% back to 9.92% today. Interesting, right? I mean, first of all, congratulations to you and on being aggressive and having a portfolio and investing in the stock market. It's not the easiest thing. He says, good to see you, Dwayne, from your Ireland subscriber. Yo, I love YouTube. The internet is so freaking powerful. Like, how awesome is that? I need to take a trip over there. I don't know if I'll ever experience that in my lifetime. You know how people are. People are like, I need to do this. I want to do this. And that's the easy part, saying you want to do it, and taking the steps to do it is another thing. Having the money to do it is a whole nother thing. But man, I had a rider that was from Ireland in Uber. It was a boyfriend and girlfriend, and they were really cool. They told me, hey, what you want to do is you want to start here and work your way across the country. And I actually took notes on it. It was actually kind of interesting. I took notes because I wanted to, you know, if I ever get that opportunity, I wanted to be able to bring that up and kind of do some research before I do it. But I appreciate you taking the time to comment, man. That means a lot to me. Listen, guys, I'm about to get up on out of here. It's been an hour going in this live stream. If you have any questions, I'll stick around for the next minute or so. Slap them into the comments. This is a live stream. Be sure to smash the thumbs up in this video. It's easy and free way to support this particular video and this channel, and it helps tremendously. It lets YouTube know this video is legit. This channel is legit. We're going to put this channel or video in front of more people, right? Because the information is free, right? I'm just sharing my experiences, and I'm showing you my experience as well. And that is invaluable, right? It's kind of funny that that word invaluable means that it's valuable, whatever. Anyway, yeah, so I really appreciate you guys so much for stopping by the live stream. I will have more videos coming up for sure. You did say 9.92%, my brother. You said it, man. You said it, bro. Anyway, I hope you guys have an incredible day, have an incredible rest of your week. And of course, I'm going to see you guys in another video or live stream. I will be doing more of these videos showing what's going on in my portfolio on a more daily basis. Now, it's not going to happen tomorrow, but it's going to happen. All right. I really appreciate you guys taking some time out of your day and joining me here in the live stream. All right. I'm going to end this video. Once again, my name is Dwayne with My Investment Journey, and I approve this video. I'll see you in the next video. Until next time, take care and be blessed. Peace.